a lot of the positive sentiment has disappeared. We've seen over the last week in particular a sellout of long positions on LME, and on the Friday of last week a building of a significant number of short positions. So there's a concerted effort to push copper lower.
And to what extent does China hold the key in sustaining that demand? We've had the latest PMI data, perhaps not as bad as we were fearing, but as we first thought.
I mean, I think the data's pointing to just a slowing of growth. There's no sort of hard landing that some people have been talking about. But as we know, China accounts for about 37–38% of copper consumption on an annual basis. It's very important, and China has not been buying so much copper this year. Imports of refined copper from the rest of the world are about 26% down year on year this year.
Governments, they're desperate to kickstart growth right across the developed world. We see perhaps more QE in America, something similar in parts of Europe. Would that money start going back, do you think, into commodities and actually helping to push up those prices a little bit, or is that a little bit overblown?
I mean, I think we could see that into next year, but right now the biggest issue weighing on all the metals markets is really what's happening in Europe, and essentially the political inertia in coming up with solutions to the debt crisis, and this is creating a lot of nervousness globally, which is impacting on the metals markets.
And to what extent are supply concerns, strikes or indeed the threat of them, also hindering price growth there? Or is that overblown as well, do you think?
Well, I mean, the supply issue has been important for copper. It's been one of the key price drivers over the last few years. But when you then throw in a slower demand outlook, the issues of strikes or falling ore grades at larger mines have less of an impact. So that supply tightness is at the moment not an issue. It's more of a concern of what does demand look like over the next quarter, next 6 months, next year. And that's now sort of taken the lead in driving market sentiment.
No, we've just been focusing on copper, but what about the other metals that are used in so much as far as growth is concerned in manufacturing? Is it the same sort of picture? Are those falls being mirrored? Are you still quite pessimistic on their outlook for the likes of steel and so on?
I mean, where copper goes, the rest of the base metals tend to follow. We've seen nickel heavily sold off last week. Aluminium slightly less so. Aluminium tends to also follow energy prices, and energy prices haven't fallen off quite so far as metals. But it's not a particularly positive picture short term at the moment.
And gold continues to just be an asset class on its own, really, doesn't it?
Well, I mean, even gold had its own fairly sizable sell-off in the last week, as essentially investors were rushing to the dollar or US Treasuries. There's been a little bit of a rebound. We're trading just a little bit under 1650 at the moment. Right now it's difficult to see which direction gold's going to go, and there's a lot of nervousness which generally supports gold, but I think the strengthening dollar is mitigating against any rises.
And it's the beginning of the annual London Metal Exchange Week. It's the start of what's known as the mating season, where various people come together. What is the sentiment when you're going down there and sort of like talking to suppliers and producers and that sort of thing? It must be quite dire.
It's beginning to resemble 2008 again, in terms of great concerns over what the next year is looking like, and where prices are going to go. I mean, people aren't particularly positive at the moment.
No, indeed. David Wilson, Director of Metals Research at Societe Generale. I'm very grateful to you. Thanks very much indeed.